Let's get into our stock of the day. It is TechnologyOne. Our revenue and profit for the half year rising, driven by momentum from SaaS and the launch of AI products. It's also reaffirmed its full year guidance. Revenue up 11% to nearly $323 million after tax. Profit increasing 6% to just shy of $67 million. Annual recurring revenue up 17% to $598 million. Investors to receive an interim dividend of 8 cents a share. That's up more than 20% from a year earlier. And just a heads up, actually, we're going to be catching up with the Chief Executive, Ed Chung, a little later today at 3 o'clock or just after 3 this afternoon, so watch out for that. Shares coming off there, close to 4%. Mixed analyst sentiment, essentially. Some seeing this as an overvalued stock. And there's also the question about that AI disruption risk, particularly to established SaaS vendors. Now, Rudi, who would have thought that you would receive this stock on the day you appear?
I know.
It is your favoured stock.
It never amazes me how the surprises can just come from left field.
I reckon you looked ahead at the calendar and booked this one in to be sure. So, does it remain a favoured stock? What are you doing with it at the moment?
It does. I mean, it can be very short on it. It does. You know what I mean? If you follow this stock long enough, and I mean, if you don't see a grey beard here, but I've been following the stock for quite a long time, and obviously I've been shareholder for a very long time. The usual pattern in the past was that the share price runs up into the result and then sells off post the result. Now we haven't seen that this time because there's broader macro forces at play. Who knows what the reason is exactly why the shares are falling today. One of the reasons could be, for example, that the results actually are better than expected in this half year, and they have still stuck to their guidance for the full year. Which, if you follow that logic, you go like, so maybe the second half might not be as good as they first thought. I mean, who knows? The counterweight to that is they only upgraded their guidance 3 months ago. They're not going to upgrade it this close after they just did. Anyway, needless to say, I don't know of any CEO on the stock exchange that wouldn't give his left arm to be able to report numbers like this year in, year out. This is without any doubt one of the highest quality stocks on the stock exchange. Weakness after they report, well, for those who are not on board, that gives you opportunity to get on board and join Rudi on the register.
Who would have thought you'd be buying this stock, Rudi? Well, it's not a bad day too, given it's down more than 3%. All right, Henry, so do you concur?
That just flowed off the tongue beautifully, didn't it? Join Rudi on the register. That I think sums it up. And, you know, Rudi's been through this stock thick and thin, I guess. And there's been more thin than thick recently. It has bounced off $20, so here we are at sort of 27.50. So it's had a fair bounce after that sort of SaaS apocalypse or SaaS Mageddon that we saw with software stocks. And this one kind of also fell away during February when it produced results which were certainly not what the market wanted to see. But we have had that upgrade. It has reaffirmed. And this one, I guess, to some extent, because it's so deeply embedded with governments as well, it's not really seen as affected by AI as maybe some of the others are in terms of churn. So I think Rudi's right in this one. Join Rudi on the register, I would say. This looks like an opportunity. It's not for the faint-hearted, I guess, given the headwinds that we're seeing in our technology sector. But as you know, as my friend says, it is a quality company. It's got quality management. They're rolling out some new products, some new features with their with AI embedded, which is always good as well. And yeah, it's probably at a price which you could probably dip your toe in this one. So I put this one as a buy at the moment, and it's good to see that reaffirmation of guidance. And certainly the CEO, which will be interesting to see what he says later today on ausbiz, of course. But Ed Chung seems very positive about the future. So I'm kind of surprised that it's down 4% this morning, but that's the way of the world. You know, we've seen big moves down, and then it gets a big move up tomorrow when the brokers actually have a chance to look at the numbers. So I'd put a buy on this one around this price.
Yeah, I actually think in light of what we saw yesterday, 4% doesn't even count.
Well, it's just another reason to buy, obviously, given where it's gone to. All right, so perhaps we shouldn't be surprised. That is a double buy for our stock of the day, TechOne.